Thank God it's Friday. Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa. Well, you're welcome to the show. But first, let's start with news in the business world, starting with the global oil market. Oil prices dipped today, heading for weekly losses of nearly 2% after China announced it would release oil from its strategic reserve. And some United States airlines, key to a recovery in jet fuel demand, warned of a slowdown in ticket sales. U.S. West Texas Intermediate crude futures fell 8 cents to $68.06 a barrel after dropping 1.7% yesterday. Brent crude futures fell 12 cents to $71.33 a barrel, extending a 1.6% drop from Thursday. Both settled at lowest since the 26th of August on Thursday. China's State Reserves Administration has said that it will release crude oil reserves to the market via a public auction to ease the pressure of high feedstock costs on domestic refiners in a move that was described as a first. And back in Nigeria, Flour Mills of Nigeria PLC has released its financial statement for the year ended 31st of August 2021, with results showing what the company considered as a resilient performance in a challenging business environment. At its 61st annual general meeting held in Lagos, the chairman of the board of directors told shareholders that the group's performance is marked by investment in lucrative local content and point of sale routes to market. This is how it went.
Thank you. After a moment of silence to honor the demise of its former vice chairman, Alhaji Ahmed Joda, proceedings at the 61st Annual General Meeting of Flour Mills PLC kick off in earnest as the reports and audited accounts for the 2021 financial year of the company are laid before representatives of shareholders and directors.
And we are satisfied with management responses.
The financial statement highlights an upturn across key performance indicators, with profit after tax increasing by 126% from 11.4 billion naira to 25.7 billion naira in 2021. Shareholders also get an 18% increase in dividends over last year.
Working every year.
The group's chairman attributes these results to its program of developing innovative products and investment in local content.
Each year, 10% of our goods will be increasingly produced with local content, securing the local supply chain of raw materials, of maize, of sorghum, of wheat, of all the various products that we can get as raw materials here. So each year, look for innovation of how we integrate local content into our goods and provide the consumer the best consumer food products, not only in Nigeria, but soon in West Africa.
Its backward integration program is another value addition that is helping the company to realize its purpose of feeding the nation.
Today, we've just extended and acquired additional land on the sugar or the sweeteners value chain in Nasarawa, alongside the upland development we're doing in Sunti. We've just expanded further on the starches value chain with additional land we're acquiring for cassava growth in the Ogun State area. Now, these are commitments that we're making, and these commitments we're making are because that's the only way we can continue to produce the volumes and the quantity that we think the country needs for us to fulfill. Always remember that mantra, feeding the nation every day.
Flour Mills PLC appears to have delivered an impressive top-line growth that attracts shareholders' commendation.
My primary motive on behalf of the minority shareholders is to get a good return from our investment. And from the result considered today, we have seen 1 billion naira above the payout last year to shareholders.
Flour Mills is one of Nigeria's leading food and agro-allied companies, delivering a wide range of products under the iconic brand Golden Penny. The company says it will continue to deliver superior long-term growth to emerge stronger.
44 years after its existence, the Nigerian National Petroleum Corporation, the NNPC, declared profit after tax of 287 billion naira. It also published an audited financial statement showing that its revenue fell by 19.76% in 2020 to 3.718 trillion naira from 4.634 trillion naira declared in 2019. But we have Mr. Ajiya Umar, the Group Executive Director of Finance and Accounts of NNPC, joining us to discuss their financial statement released for the year 2020. Good to have you, Mr. Omar. Good morning.
Thank you very much. Good morning. Yeah.
So considering the fact that the profit came after 44 years, and in 2020, the pandemic year, when the country was pretty much on lockdown, as was the other parts of the world, and oil prices was at its lowest level, a lot of Nigerians would like to know how this profit was achieved in the midst of these challenges.
Thank you very much. Yes, indeed. In the year 2020, the COVID hit the oil industry very badly. The oil prices collapsed, and also there was demand destruction. However, what was left was for each and every oil company to manage its costs properly. That was only survival tool available to us. So notwithstanding the destruction in demand and price, the Group Managing Director of NNPC led us to a significant financial prudence walkthrough capped with operational efficiency. And the success to this was driven mainly by a number of factors. One, we had to optimize costs in every aspect of the business. Two, we had to renegotiate contracts with contractors to seek discounts because of the business environment climate. And thirdly, we have had to reschedule debt and elongate the tenor such that the cost of funds was minimized. And again, we had to do away with unviable joint ventures, and some we had to liquidate, some we had to simply exit and left the businesses to the counterparties because those businesses were not bringing value to the group. And in addition, the company embarked on an aggressive automation process. So all our business processes were completely automated, such that it is now more or less a paperless organization which is using technology to its maximum, and as such, it also drastically reduced our travel costs. And in effect, during the lockdown, while sitting in our offices and sometimes from our homes, we were able to raise a $1 billion loan facility from the global finance market. So this is the benefit that came with COVID, in spite of the fact that COVID killed a lot of people. But it had its own merits. So that's how we were able to declare that profit, which we believe is modest, going by the size of our assets, 15 trillion, which is equivalent to almost $30 billion. Our profitability level should be far higher than that.
Well, at least it's a good place to start. Well, there was also a drop in revenue, 19.76%. What happened in that area?
Yes, you know, revenue is a function of price and volume. As I told you, in 2020, there was demand destruction, and there was also price collapse. And at the same time, even though we were able to produce up to 2.3 million barrels per day, the OPEC had to step in, and they cut down or curtailed our production to almost 1.5 million barrels per day. So as a consequence of that, the revenue fell.
All right, in the group financial statement that was released, there was impairment reversal of a sum of 713.4 billion naira in 2020 from a negative figure of 273.6 billion naira. This was based on a review of commercial arrangements which led to recovery of legacy debt. Can you shed more light on this?
Okay, this has to do with an impaired revenue, I would say, which was actually a claim against the Federation. And this was subjected to forensic audit and subsequently a review by interministerial and agency committee, and finally approval of the NEC. As such revenue was now recognized in the 2020 P&L. But hitherto that, by virtue of the international financial reporting standards guidelines, we couldn't have recognized that in our books until such monies or revenues are received within the coffers of the corporation. So that's what gave rise to that write back of 713 billion naira.
And there have also been talks that perhaps the NNPC dipped its hands into the Federation account and got money that it has declared as profit. How would you react to that?
That is a false statement. It is merely impossible for NNPC to dip its hands into the Federation revenues. Just to give you a summary of the series of layers of control that exists in our agency role of accounting for the Federation revenue. First of all, there is inter-agency reconciliations every month as to what revenue accrues to the Federation from the joint venture crude sales. Secondly, we have a resident revenue director from the Office of the Accountant General of the Federation in the NNPC towers, who monitors what accrues to the Federation on behalf of the Accountant General. And thirdly, there is the pre-FAC post-mortem meeting at which reconciliations are done. And finally, at FAC meeting, where the commissioners of finance of all the 36 states and FCT meet to review contributions from all revenue-generating agencies. And the numbers are scrutinized at that place. And finally, there is also the Auditor General of the Federation, who annually reviews what has accrued to the Federation and what has been remitted, and if there are any shortfalls, he raises red flag. Of course, the National Assembly also steps in from time to time when the accounts are laid to the Public Accounts Committee to review how much each revenue agency, including NNPC, has brought into the coffers of government. So with all these layers of controls, it will be impossible for NNPC to dip its hands. NNPC will account for the revenues of the Federation and only deduct what is allowed and what has been appropriated by the National Assembly in relation to cost of bringing the barrels out, as well as cost of other projects that are being done on behalf of the Federation.
All right, so earlier you talked about how the corporation was able to cut costs, which is what led to the profits that was declared. What specific steps were taken to achieve this without compromising quality?
Yes, of course. In our business, whilst trying to be profitable, we will not compromise quality and safety. So what we have done, a number of initiatives led by the Group Managing Director. One is the cost optimization across the group. Secondly is the renegotiation of contracts for discounts, which we got up to 15% in many cases. And then thirdly, we had to do away with businesses that don't bring value to the group. And then we automated our business processes that made the corporation today to be more or less like a paperless corporation and has reduced the cost of travels across our SBUs and even globally. As I told you, using the technology, we've been able to save a lot of costs, and we can meet anybody globally while sitting in our offices. So that's what has helped us. But in particular, what has also helped us is an enabler that we have a president and his vice who do not interfere with the works and affairs of NNPC. So they have given a free hand to the group managing director to run the corporation as he deems fit and remains accountable to the people of Nigeria and to God Almighty.
And it was also observed from the statement that there were no fresh investments that were made in the subsidiary in 2019 and 2020 financial periods. What could be responsible for this, considering the fact that more investments in the subsidiary could have guaranteed more profits for the group?
I think the particular reference is really not investments. A couple of investments are being made in certain SBUs, but that is to do, that note to the accounts is to do with the share capital of the subsidiaries. We do not increase share capital every year. It is only when it is necessary or absolutely necessary to recapitalize an SBU that we increase its equity or transfer assets into that company. So the shareholding position of those companies have remained as they were in both years. And similarly, even the corporation itself, the shareholders of the corporation have never changed the equity of the company since its inception. Today, the NNPC Corporation has only an equity of 520 million naira. So that is really the reason why we have to restructure and recapitalize the corporation and ultimately move into an NNPC Limited that is fully capitalized and that will be profitable, viable, with the right liquidity to manage its businesses.
Well, it's a new dawn, I think it's safe to say that, in the oil and gas industry with the Petroleum Industry Act. And now you have your total assets of NNPC hitting 15.83. So what changes do we expect at the NNPC? And how prepared is the NNPC to effectively take advantage of the PIA now that it's been signed into law?
Thank you very much. Essentially, the 15 trillion value of assets in the group will be decided as to what part of those assets will move into the new NNPC Limited once it is incorporated, and decision will be made by the two ministers, Minister of Finance and Minister of Petroleum Resources. So, in addition, the JV assets today will be moved into that new entity. So that improves the capitalization level again to such a position that the going concern of that new entity is assured ab initio from start that it is fully capitalized, unlike the corporation that had only 520 million injected by the shareholders in the beginning. So we see that with the committee already put in place by Mr. President, the new company will be incorporated in 6 months, and thereafter there's a 12-month window in which the implementation will take place, and we will see a new, brand new company that should perform excellently, competitive or comparative to its peers globally. So that's really the focus, and the committee composition is robust enough with the right quality and caliber to deliver on Mr. President's promise.
All right, Mr. Omar, we just have to, because we'd like to know more about the new company you mentioned that we're looking forward to in 6 months, but we'll just take a short break now. When we come back, we'll conclude this conversation. We'd like to, having the NNPC here, and of course the PIA promises a new dawn in the industry. So we'd like to get a little bit clearer picture of how the NNPC could function with the PIA. But that'll be after the break. Just stay with us.
Thank you.
Welcome back. You're still watching Business Morning on Channels Television, and we're still having, the concluding part of our conversation with Mr. Ajay Omar, the Group Executive Director of Finance and Accounts with NNPC. Thank you for sticking around, Mr. Omar. Well, you mentioned the issue of a new company which comes with the PIA, and we're expecting that in about 6 months. Could you paint the picture towards what this new company, this new NNPC is supposed to look like, and what differences it's supposed to bring to the industry?
Thank you very much. The new company will be a Kama company with limited liability. And as such, it will have its own board and management structure, which will be decided and recommended by the committee appointed by Mr. President. So this company will operate normally like any other Kama company, and it is only accountable to its shareholders through dividend declarations. Of course, it will have to pay its taxes and royalties as and when they fall due to the Federation. That is the beauty of it, that under Kama, there will be no interference from any angle in running the affairs of that company. So today we have NNPC as a corporation. The assets and liabilities of this corporation will be segregated, and the committee or the two ministers will decide which of the assets and liabilities will move into this new entity. And then this new entity will still take additional recapitalization through the transfer of JV assets into it. That way, its take-up with a sound footing is assured, and therefore its viability is assured, and there's no doubt as to its going concern. So that's how we see the company coming into fruition in the shortest possible time, and what will happen to the rest of the corporation, the committee and the two ministers will decide. So that's really what the picture will.
Okay, and generally now, what changes should Nigerians expect, you know, with the PIA, with the new company coming up, and what should Nigerians expect? What's the outlook?
Today, what will happen is that with the PIA, there will be this new company, NNPC Limited, and there will be two regulators. One regulator for the upstream, which is the commission, and there will be another regulator for midstream and downstream, which is the authority. Now, these will be the regulators of the industry, while this NNPC Limited will only operate as a national oil company, responsible for its commercial operations and rendering dividends to the Federation on an annual basis. As such, its performance will be judged by the Federation based on its dividend declarations to the Nigerian people. But the regulators will regulate the industry, which is a replacement of what we have today as the Department of Petroleum Resources, Petroleum Equalization Fund, and Petroleum Product and Pricing Regulatory Agency. So all those ones will go away. They will be replaced by these two regulators.
All right. Well, thank you so much, Mr. Ajay Omar, the Group Executive Director of Finance and Accounts with NNPC, for painting the picture of what we should expect, especially with the PIA, and of course, helping us to understand
thank you very much.
The facts behind the figures. And enjoy the rest of your day.
Thank you very much, my sister.
So now, moving on now, you can call it the new economy, the internet economy, and you'll be referring to the same thing, digital economy. The outbreak of COVID-19 accelerated the spread and growth of the digital economy. According to a study by Oxford, the digital economy is worth $11.5 trillion globally. It is equivalent to 15.5% of global GDP, and that has grown 2.5 times faster than global GDP over the past 15 years, almost doubling in size last year, the pandemic year, in Nigeria. The Federal Executive Council has approved the national policy on fifth generation, that's the 5G network for Nigeria's digital economy. Is Nigeria ready to maximize the 5G network to expand its digital economy? Well, we have Jude Ozinegbe, a digital transformation consultant and also the convener of CyberChain, to speak to this issue. Good to have you on the program, Jude. Good morning.
Nice here. Good morning, Ini. Thanks for having me.
So, I mean, this 5G that was so controversial last year, I remember in the midst of the pandemic,
Exactly.
this brought up a lot of conversation, and now it's official.
True.
It's been approved by the Federal Executive Council, so and the policy has also been approved. So we should be expecting 5G to start functioning in the country. But the issue or the question is, are we ready? We're still struggling with 3G, the 4G, and now we have the 5G.
Good. Yes, so we first of all want to commend the federal government, yes, for approving it as the Federal Executive Council. And we also want to commend the Ministry of Digital Economy, led by the person of Dr. Issa Pantami, yes, for taking off this initiative. I know with every new technology, there are attendant challenges, right? But first of all, let's look at the possibilities and the benefits that the 5G even brings. Okay, so with the 5G, we are expecting a lower latency, which means the time that it takes for devices to communicate would have been reduced to the barest minimum, right? So, like for someone that wants to make a call now, the devices in between goes beyond the caller and the receiver. There are multiple devices on scene provided by the telcos. Now, for a call to go from start to finish, it hops through multiple devices, maybe from here to UK or wherever. Now with 5G, the time it takes to hop and get to the receiver has been crunched to the barest minimum. With 3G, it would have taken about, say, 100 milliseconds. Of course, with the eyes, you won't see it, you feel it's fast. With 4G, it was reduced to about 30 milliseconds. But with 5G, it has been crushed to 1 millisecond. Now with that, you can see things like telemedicine being able to operate at a faster speed. Now e-commerce will come in, fintech, security solutions, all of that will benefit from the 5G. The challenges of 5G, we will say, is the capex, which is the capital expenditure, but that's not on the side of the user. So federal government, NCC, and all the stakeholders involved have been able, hopefully, to have come across all those challenges and beat them. So federal government is working on all of that, and they've told us they're going to be rolling out 5G very soon, which is laudable. We appreciate them for that. I think government is really working hard to ensure Nigerians will experience state-of-the-art telecommunications.
Yeah, so it's a laudable one, and we appreciate that
Yes,
we should be on the same level with the other parts of the world.
Beautiful.
But I mean, even with the lower one, the 3G, the 4G, we still talk about infrastructure, we talk about power, we talk about connectivity, we talk about data. I mean, you said it's supposed to take a millisecond or something.
Please.
Do we have the infrastructure to enjoy this?
Great. So, like I said earlier, with new technologies come new challenges, and these challenges, we will not want to see them as problems. We want to see them as a call to improve and increase our capacity. So, infrastructure is a major challenge in the digital economy. With 5G, there's demand for power, right, which Nigeria is still struggling with. But I think that will now be a wake-up call for those in that sector to see that, okay, there is a challenge that we need to respond to. Now people will have faster capacity devices in their hands, right, but there's no power to run it on. So the power guys will need to go back to their think tank, to their drawing board, and strategize. The way our colleagues have been able to do this with the telecoms, can we also bring out something good, something new, something great?
I guess this
for the
also
economy?
brings the conversation on decentralization of the power source. You know, we have
Exactly.
the alternative power and all that.
Yeah, so right now Nigeria is struggling with the main grid, which is not even enough. Capacity is not enough. We are producing under capacity. But with renewable energy, right, we can have decentralized power, where in local communities, they will not need to depend on the main grid. You take the burden of the main grid. So you can have renewable energy in local communities, not putting the burden on the main grid. Now, if such a local community can have renewable energy, it is decentralized, it has been removed from the center, so that the main grid can even provide power for manufacturing industries, for big users, for large users. Then these little ones will be able to communicate on their little main grids. Now, the mini or micro grids, haven't decentralized them, you can even still bring them into a cluster. That takes us into another discussion entirely, but we can just, break them into.
Who's supposed to do this?
Now, yes, so the Ministry of Power, first of all, is involved in that, but there is what we call the Rural Electrification Agency. Now, the Rural Electrification Agency is concerned with the duty of ensuring that at each communities, they can provide clusters of power in mini grids, in micro grids, and even in pico grids for a housing. So once those people have power, they will not have to worry about how to power their devices to enjoy the benefits of the 5G that is coming.
What are some of these benefits?
Good. So speed of communication is one. E-commerce is another. So a local trader in a community doesn't need to think about infrastructure and all that to get his goods from the farm to a buyer. Now with 5G, he can take a picture of his produce, put it up on social media, and somebody on the island or someone in the big city can place order for it. There's a whole lot of value chain there. Delivery guys are coming in, logistics guys are coming in, packaging. So it's so much that we cannot even exhaust in one conversation. If we go into telemedicine, there's a lot we can talk about telemedicine benefiting from 5G. There's e-learning for schools. I mean, the pandemic has taken us to the point that e-learning has become a norm now. Without good and reliable internet, how can people study online, virtually? We saw the interview you had just now, it was virtual, which has become a norm as well. With poor internet, with low data, with high latency, that becomes a challenge. But with 5G, it has been completely eradicated.
So we also have a lot of fintechs being birthed,
Great.
Very active in the digital economy space
Yes.
now. You deal with them, you have conversations with them.
Yes.
Are they happy with the operating environment in the digital economy of Nigeria?
Yes, the word happy can be in the dual form, right? On the technology part, I think with the 5G being introduced, they are happy. On the policy part, they have some concerns because some of these stakeholders which we talk to say some of the policies are not too favorable. However, some are seeing the need for these policies, for regulations, for checks and balances, because from the user side, the consumer side, they need protection. And I think the regulators, which is their duty anyway, is to protect consumers' interest, investors' interest. Then the producers, which are the fintechs, right, are looking at profits, expansion, GDP, and all of that. So there must be a meeting point where they have constant communication and chats to see how policies can help the fintechs, not stifle them, but create an enabling environment for everybody to grow and thrive. We should know that, first of all, the economy belongs to everybody. The policy regulator, the user, the consumer. So we must have a roundtable where we can have consistent conversation to see how to grow the economy together.
So when we talk about the policy, and regulation, like you rightly noted, it has to be balanced.
Yes.
What, from your perspective, should be the immediate steps now to balance it so that the fintechs, because they're also contributing to the GDP, to the growth of the economy,
Exactly.
creating employment, especially to the youths, So what, from your perspective, should be like a balancing factor at this time where we are in at this level of our own economy?
Yes. So with every startup or any business that is just starting out, there should be some little guidance, right, to make sure they start off on the right foot. So from the policy side, I won't be speaking for government anyway, but on a general basis, on a general knowledge, from the policy side, fintech should be guided at the startup, at the beginning, at the offset of going into the market. Do not promise. Now, this may not be, this is not a law, but it's a general rule of thumb. Do not promise overreaching benefits. Do not give consumers, do not give your users, do not give your subscribers that when they come to invest in your business or in your crowdfunding or whatever, they are going to generate money overnight, because fintechs are not get-rich schemes. get-rich-quick schemes. No, these are investment channels where people should also be properly educated that the market forces can always affect businesses, So when business thrives, everybody is happy. But when business go down, in fact, it's the consumers that call on regulators to check these same fintechs that they've lost money. However, at the beginning, before fintechs even roll out, if there's this conversation, let everybody know the guiding principle. I think when they start doing the businesses, they'll be properly protected.
All right. As much as we want more fintechs to come into the space so that the digital economy space is booming, we also know that there's a need for balance. And I think
Exactly.
that's what the CBN has been doing in quite a while. Well, we'll have to thank you so much,
Thank you very
Jido
much.
Zinigwe, a digital transformation consultant and convener of CyberChain. And I know we'll continue this conversation
Definitely.
because, I mean, digital economy is what
Very
the world
robust.
has embraced now.
Yes.
I mean, even the NNPC director we spoke to also said that is part of what they embraced,
Yes.
which, brought about the profit after tax that they
Exactly.
recorded.
Beautiful.
Thank you so much, Will.
Thank you very much, Inni.
Yeah, enjoy the
And have
rest
a nice
of your
morning.
weekend.
Thank you.
All right, so let's head straight to the markets now. Will Ibong is standing by to do an opening call. Hello, Will.
Hello, Ini. Good morning.
Good morning.
Yes. I hope I have good news, but this is what I have to say today. The equities market continued its bearish trajectory in the market due to stronger sell-side pressure, closing marginally lower by 0.01% as it booked a 2 billion additional loss. The market cap has decreased up by 0.15% week to date, while the year-to-date loss printed slightly higher at 2.66%. The performance further defies investors' expectation that some tier 1 banks will help lift the market this week. However, there may be a sliver of good news as the Nigerian Group Exchange held yesterday its 60th annual general meeting and its first as a demutualized exchange. The group ended the year 2020 in a sound financial position with net asset growth of over 10% to 31.28 billion naira. We dive back into the market where the total volume of trades increased by 3.2% to 350.52 million units and valued at 3.34 billion naira in more than 3,500 deals. Analysts expect the equities to trade in the same pattern today unless the large caps record some significant gains. Now at the OTC markets, we see that the NASD index and the market cap reversed its gains, fell by 0.65% to 728.61 points. However, there was a jump in the total volume and value of securities traded yesterday when compared to Wednesday's. The NASD PLC was the only advancer yesterday. Its share price rose by almost 10% to close at 4 naira 64 kobo. We move over to the fixed income market. At the fixed income market, the bond market saw some bearish movements across the curve, and activity was prominent on the 2036 and 2050 maturities. Overall, few trades were consummated by the close of business and rates inched up by 15 basis points. On actively traded instruments, that is, at the Treasury bills market, we see that it opened on a quiet note as the market participants shifted their attention to the OMO auction, which held yesterday. Nonetheless, there was slight demand that was seen for the newly issued one-year instrument at the PMA. And despite the subscription at the OMO market of a total of 50 billion naira, despite the subscription of 129.27 billion naira at the OMO auction, a total of 50 billion naira was offered and sold across 3 tenors, with stops rates remaining unchanged at 7%, 8.5% and 10.1% on the 117, 194 and 41-day maturities respectively. The CBN special bill saw some traction as well. We saw that the average yield there was about 10%. 6 deals were transacted, and then we have a value of 14.32 billion naira. That's what we have in here. I'm hoping that maybe when we come back, we'll have an inside perspective of what's going on in the market.
Yeah, well, even if we do not have today, tomorrow is capital market. I think you have your call ready now.
Yes, so Chuka Nwachukwu is the head of bonds trading at UBA. He's coming to give us an insider perspective of what's happening, like I mentioned earlier. Good morning, Chuka.
Hi, morning.
Yes, Chuka, we're just going to jump right into it. Can you give us a summary of what happened at the OMO auction? We're dying to know what happened there.
Okay, it was quite an interesting auction. The 50 billion was in offer. Um, 10 for 117 days, and then 10 for 194 days, and then 30 for 341 days. So the 117 came out at 7%, 194 came out at 8.5%, and then the 1 year came out at 10.1%. This has actually kind of like aided what happened at the NCB market on Wednesday, where we saw rates move for 1 year move up from 6% levels to 7.2%. So that has actually um, had a bit of impact in the market. We saw the movement of youth, you know, uh, from that NTB auction. Traders reacted to it, and then we expect the upward movement in youth going forward.
Okay, so you've just mentioned that analysts expect bearish sentiments to continue in the bond market as we say yields are trending upward. Could you explain
Yeah.
more what you mean by that?
Okay, so basically what has happened is that for the past few weeks, a month, yield has been on the downward trend. So we saw a lot of panic in the market as people try to get hold of the available yield. And then so yield continue to nosedive. However, on Wednesday NTB auction, this yield moved upward from almost 40 basis points. Okay, so if you look at what was offered by DMO, 138 billion was in offer, and then 209.5 was sold across all maturities. And so that has actually given a lot of expectation that people feel that this could be the beginning of the upward trend of the movement of youth. And so, there's a bit of panic because those who are holding lower are not too sure of what the next NTD auction, which is next week Wednesday, will come out at. There are speculations that it probably will come out at 7.5, and if that happens, it means that those who have lower yields are in the water already.
So why do you think the CBN upped the yield for the 1 year bill by 40 basis points? What do you think triggered that?
Well, it also has to do with what CBN is and the government is looking to do. Fundamentally, where the youth are now are not where they ought to be. We expect the youth to probably be on double digits as present. But then, there are also some other factors that are affecting the movement in youth. So I think CBN is obviously looking at, what is going on. And then again, you need to also look at what government is looking to do. There's a Eurobond auction issuance in next month. About they're looking at about $3 billion for a start, $3 billion for a start. And so this will probably be a way of attracting more investors into the fixed income market, and probably make it more attractive for people to come in to invest.
Okay, so we're talking about local investors now. The DMO is looking to sell the Eurobond in October. It's just like in 2 weeks' time.
Yeah.
Do you think this has anything to do with that? Does it have any correlation with what's going to happen in October with the Eurobonds?
Well, all things being equal, we expect that the Eurobond will come out awesome. But then, of course, the yield presently, the security market, as the fixed income market, T-bills and bonds, are primarily being played at the local side, as the PFAs and the other corporates. So, where these yields are now are not looking attractive, really, in terms of fundamentals. So, I said that CBN is taking that into consideration, as well as DMO. And again, don't forget that there's also some budget deficits that are not yet have not yet been sourced for. So I believe that they are looking to make the yield more attractive for local borrowers to be able to make up the deficits in borrowing. That's the borrowing that they need to make to make up the deficit.
Thank you so much, Chuka, for those insights. Ini, we're hoping that, like you said, that the market, we're looking to bring in more local investors and also to, bridge the deficit gap in the debt market. We're hoping next week we'll have a good outlook and we'll see like we are expecting.
Well, don't
about in 2
forget
weeks.
that tomorrow we have capital market at 7 p.m. and we'll have a more robust conversation
on the
around the fixed income market too.
Definitely.
So you can join us tomorrow during capital market and we'll see more details of that. We always have a short time during business morning, but tomorrow we're going to have a full 30 minutes to focus on the market, and we'll be focusing on the fixed income market. So we'll take a short break now, and then when we come back, we'll go to the crypto market and see what's happening in the United Kingdom. Stay with us. It's Business Morning on Channel Television. You're welcome back. Well, just before we head to the crypto market, let's find out what's happening in the United Kingdom. The UK economic growth came to a near standstill in July as supply chain problems and the pandemic hit activity. GDP rose by only 0.1% in the month, much weaker than expected as the Office for National Statistics reports a sharp slowdown in June's 1% growth. That leaves the UK economy still in 2.1% below its pre-coronavirus pandemic level in February 2020, and we feel concerns that the recovery is faltering. Also, the rail industry has warned that unless workers start taking the train again, there could be long-term adverse effects on city centers and high streets. Train commuting is still just 33% of its pre-COVID rate, while car journey have reached pre-pandemic levels, and the adverse effect could see cities hit by a double whammy of traffic jams and business closures. Well, now let's go to the crypto market now. Laddie is standing by. Hello, Laddie.
Yeah, hello. It's thank God it's Friday.
Thank God it's Friday.
We've been having Green Fridays, but today we have a mixed bag with a couple of Bitcoin staying quite stable, giving some altcoins a chance to give some double-digit gains. Market cap $2.12 trillion, up about 0.37%. 24-hour volume is down 22% from yesterday's sell-offs. The Bitcoin dominance, 41.15%. That's up about 0.13%. Price of Bitcoin this morning, $46,473, up 1.45%. So Bitcoin has been ranging between the last sell-off got it to about 42,000, but it's been ranging between the 45,000 and 48,000 range. 24-hour volume for Bitcoin, $35.27 billion. Price of Ethereum, $3,430, is now below the $4,000 mark. It's up 1.23% this morning. 24-hour volume traded in Ethereum, $21.74 billion. Ethereum is still looking good, but Cardano is looking better, and a couple of other altcoins like Phantom. Let's bring in Michael Inaji now to bring us up to speed. Hello, Michael. Good morning.
Good morning, Laddie. Happy Friday. Thank you.
Happy Friday. So we had El Salvador make Bitcoin a legal tender, but they had some rollout glitches with the Bitcoin rollout. What did you make of it?
Yeah, it was quite an historic event. Effectively, what happened was El Salvador, an entire country, onboarded their entire population onto the Bitcoin blockchain. It was a tad bit like not according to plan, just for a few things. First off, the $30 that was airdropped, which was like basically given away to each citizen who downloaded the Chivo wallet. And Chivo basically means cool in El Salvadoran. Basically, what happened was for them to receive those $30 in Bitcoin, they needed to send it 5 times from one person to another person and do that 5 times for it to confirm on the wallet. Because the wallet is actually the Bitcoins on the Chivo wallet are custodied by the government. So there has to be internal confirmations. It's not actually done on the Bitcoin blockchain. It's done internally, and then the government clears it themselves. But when you have a country like El Salvador that has just so many people, I think when everyone was onboarded in Bitcoin for the first time, we all had questions. We all had, things that we had, concerns that we have. And when you're onboarding a whole country, of course, you're going to have these problems. But I think at the end of the day, out of the $26 billion that is El Salvador's GDP, about a quarter of it comes from remittances. So, with the Lightning Network, you have a chance for El Salvador to save as much as $400 million from just fees alone, from places like Western Union and all other kinds of remittance houses. So, yeah, you're going to see this you know back this negative feedback of rollouts taking long. So people actually went to some businesses and they weren't accepting Bitcoin as of yet. But eventually, everyone will get up to speed and have these wallets, because as the law is written, if someone gives you Bitcoin, you do have to accept it. If they give you cash, you can take that as well. But moving forward, they will get over these hurdles, and at the end of the day, I believe half of El Salvador is unbanked. So now you have a situation for people in El Salvador as well, effectively, to have a savings account and have a way for them to put money into something that isn't stocks or isn't housing that can actually go up. And so, you've now not only have you given a country remittances and given them a brand new way of saving, you've completely, changed the trajectory
Right.
of some people's lives.
Okay, and I guess other countries will have to learn from this El Salvador rollout. All right, Michael,
Yes.
thank you so much.
Thank you so much, Laddie.
Enjoy your
Have a
weekend.
happy weekend.
You too.
Thank you
Okay.
so much.
Bye-bye. All right, top balls on market cap. BNB, $425, up 3.18%. Cardano, $2.52, up 0.19%. The only laggard there is Dogecoin, 25 cents, down 0.35%. So, Ini, that's how the market is looking right now.
Laddie, thank you so much. Lessons to learn there from El Salvador. And of course, we hope when other countries want to implement it, then they will not have to go
Learn
through.
from the glitches, exactly.
Exactly. Okay, so that's it on the program. Thank you so much for watching. Do remember at 1:30, Business Incorporated will be here to give you updates from the world of business. And of course, tomorrow, Capital Market, 7 p.m. will be here to give you 30 minutes, profitable 30 minutes going into the market. I'm Ini John Mekwa.
And I'm Laddie Williams. Thank you for watching.